This video compares state taxes in Florida with the tariff system, shows how they're very similar, and so is the impact. The amount of money we will make in revenue from tariffs is additional federal revenue, and it's similar to income tax, but it comes from the importer. So naturally, the cost of goods will be the product plus shipping plus tariff for any tariffed items, and then marked up from there. So with the Florida state tax system, we pay 6%, and that goes to pay for the state budget. And in the case of a tariff, when we purchase tariffed coffee and we pay more, the amount allocated for that has already been paid to the federal government. So in both cases, they're additional costs, and in both cases, they're based on consumption. So if you don't purchase anything, you don't pay the tax. Also, in both cases, they're imposed by, and the money goes to the government, either the state of Florida or the federal government. So who is paying this additional federal revenue from tariffs? Let's say we bring in 500 billion in tariff money. How much of the 1%'s income did they spend on tariffed goods? Almost negligible. So the summary here is that we're setting up a system with tariffs that is creating additional federal revenue. And that money is coming from we, the people, not the people making the policy. So the super rich have an effective tax rate of virtually zero in this new tariff-based revenue stream. And the poorest pay the most in an effective tax rate. So let's talk about effective tax rate by looking at Florida. Florida uses the consumption tax method. When you pay sales tax and other things, those go to pay for the state budget. Naturally, people in the top 1%, they do not spend nearly as much as a percentage of their income on taxable items. So they pay 2.7% of their money towards the state budget. The middle income earners, the middle 60%, they pay 9%. And then the bottom 20% pay 13% of their bring home pay for the state budget. Keep in mind, this is after federal taxes. So let's talk about the poor people in Florida for a second. Their bring home pay, they have to get 13%, pull it right off the top to pay for the state budget, whereas the people that are in the top 1%, they only have to pull off 2.7% from the top to pay for the state budget. Not looking very fair so far. In order to temper that a little bit, in Florida, food doesn't have state tax. So that 6% they don't have to pay. And that tempers the numbers. So it's important to note the numbers that we're looking at are tempered from what they would be in the tariff environment. Now let's add tariffs to the poor bottom 20% of Floridians that already have 13% of their right off the top going just to the state after they paid federal taxes. Now the cost of goods has gone up. That coffee went up. They're not exempt from the price increase. They're exempt from the sales tax. They are not exempt from the price increase. It's important to note that the tempered amount that you see between the 2.7 and the 13%, if it weren't for the exemptions, that would be even more. And now we're adding an additional cost of additional higher goods to those poor people. So we have the super rich in Florida, they're paying 2.7%. That's how come the super rich, of course, they're going to move to Florida. They can live there and not pay much tax, while everybody else, pays the rest. And then now at the federal level, they want to do exactly the same thing. They want to create additional federal revenue, which this will, and however much that is, their effective rate based on consumption is virtually nothing. Whatever amount we make, we the people are paying the difference, and that's why this matters. Thank you.